Hey, welcome back to the channel, everybody. Today, I'm talking about another super investor, and I'm really excited about this because his portfolio finally got added to Dataroma just in the last 24 hours. But I've been following this guy for a couple of years, and his name is Cliff Sosin. He manages a fund called CAS Investment Partners. He is based out east. I believe it's in New York or Connecticut, somewhere out there, but it's out east. And he carries a very, very concentrated portfolio, roughly about 5 stocks, and he does manage around $700 million in his portfolio. So a small amount of companies that he has in his portfolio, but a decent sized portfolio overall. And just for fun, I went on his website today to see, what it would take to qualify to invest with him. And there's a bunch of different things that you have to qualify. And one of those is you have to make $200,000 or more a year. You also have to have $1 million net worth. That's just two of about 10 different requirements in order to invest with them. So he definitely tailors to, I would say, kind of upper middle income to upper income in the United States. I'm sure other people around the world invest with him as well. So we're going to go right through his portfolio. We're going to start the smallest position that he has, and we'll just kind of work our way up from there. So the first company I want to talk about in his portfolio is Party City, ticker symbol PRTY. He added around 8% during the quarter. Now, this is a stock that has been decimated. I mean, Party City is one of those companies where you can go order balloons for birthday parties. You can go get like birthday party supplies, that sort of thing. So they have a very specific niche that they go after, and obviously the whole pandemic really hurt them. And then even going into 2021, it hasn't looked very good. In fact, their financials have gone down quite a bit. Their stock has gone down quite a bit. And he started buying, it was last quarter or the quarter before that. So this is kind of, I guess, a rebound potential play that he's kind of going after this company. I mean, the stock right now is trading at less than $2 a share. So definitely kind of a stretch, I think, in his portfolio, but it's definitely his smallest. According to Dataroma, it's less than 4% of the portfolio out of 5 stocks. So the least conviction out of the 5 that he has in his portfolio. So next one let's talk about, and that is World Acceptance Corp, ticker symbol WRLD. And offhand, I'm not sure what this company does. It's about 12% of his portfolio. He did not add to this position at all during the quarter. It looks like the stock is trading around $140 right now. But again, I haven't looked into this one specifically. All right, next company up that I want to talk about is portfolio, and that is Cardolytics, ticker symbol CDLX. He did not add to this position or reduce a position. It's around 18% of his portfolio in total. And this is one of the 5 stocks that really has taken a beating since the end of the quarter. Most stocks that we take a look at the end of June compared to where we are now in the middle of August, they've pretty much gone up. It's very rare to find a stock, it seems like, that has gone down since then. This is one of those stocks. And he's been holding it for quite a while. And I've done a ton of research into this company. It is an advertiser. They have an advertiser platform that they use. The issue when I looked into them was that there's a lot of competition in that space. So is that space big enough for this company to play a role or not? That's kind of the question. But this is a stock that has really dropped, I think, 85-90% from its highs and dropped another 25% from the previous quarter. And this is a stock that is not positive as far as operating income goes. So obviously, Cliff Sosin is looking at this company and figuring it's going to be profitable at some point in time, but it is not right now. Next company up is Carvana, second biggest position in his portfolio, ticker symbol CVNA. He added 61% to his portfolio. This is a stock. This is one of his positions that literally was, I think it was around 35-40% of his portfolio just a year ago. I mean, Carvana just took off, got into well into the $300 range. Today it's trading around $50. It got all the way down to about $20 a share just about 5 or 6 weeks ago. I'm personally invested in Carvana myself. Invested in Carvana was because of Cliff Sosin. I actually found Carvana through Rob Vinall. I just did a bunch of research and going through YouTube. Cliff Sosin has some videos out there on Carvana, just doing some interviews and things like that. He does a really good job explaining what Carvana is all about and how they have a special, I think, moat within their business, and that is a pricing moat. That is a company that can save about $1,400 per car. So they sell cars online. So it's a used car e-commerce business. Essentially, they sold about 400,000 cars last year, which is 1% of the total used car market. And they've been growing like crazy. That growth will be slowing. It is slowing this year. And I expect it probably to slow down into next year, especially with used car prices kind of dipping. And we're right now, I think, in the beginning of a recession. So we'll just kind of see how this thing plays out. But he has always said, in the interviews that I've watched with him, that he is willing to continue to add to a position if it's below 25% in his portfolio. So for Carvana, for example, when it was over 25%, he did not add. Now that it's below 25% of his portfolio, he will add till he gets to that point. If he has high conviction on Carvana, and he has very, very high conviction on Carvana overall. But again, that's a company that is not profitable. So we're kind of seeing a pattern right now with a lot of these stocks that he owns are not profitable right now. And he is projecting at some point they will be profitable because the current stock price is based on future earnings discounted back to today. So if a company's never going to have free cash flow, never going to have earnings, it should be $0 today. It shouldn't be worth anything. So why investors invest into a company that's not making money today is on the assumption that they're going to make money in the future at some point in time. But so definitely just don't go invest in any of these stocks in his portfolio or anybody's portfolio. Definitely do your research. But across the board, most of these stocks that we're seeing in his portfolio do not make money at this stage in their life cycle. Now, the biggest position in his portfolio is Hilton Grand Vacations, ticker symbol HGV. It's about 42% of his portfolio, so definitely the biggest one there. No change there, no add, no reduction at all. So I don't own this company. I haven't done a lot of research into them. The little that I did do, their margins are really good. I mean, this looks like a very, very solid company, obviously going through the pandemic. Anything related to leisure and travel and all that has just taken a big hit. And that's one of those stocks that has taken a big hit. And obviously, he's very, very bullish about it being the number one position in his portfolio right now. But he did not add during the quarter. And again, I think the reason why, because it's more than 25% of his portfolio overall. So those are his 5 stocks in his portfolio. I should mention he did sell a stock during the quarter, and that is Herbalife. Herbalife is one of those companies that really is focused on like weight management, nutrition, and what they do is they get like independent people like myself or you or whoever and go and try to sell their product. It's one of those, I guess, pyramid schemes, I guess you could call, where, you know, if somebody up top that gets people to sell for them and more people, and the person at the top just makes the most amount of money. But when I did the research, it looked really, interesting. It looks like it's a good company that makes money. And I really didn't have terrible things to say about it other than from a price standpoint, I just didn't see that it had that it looked like it had a good margin of safety when I looked into it. So it was definitely a pass for me when I looked into it like 18 months ago or so. But he did sell out of that one completely. Now, he may own a 6th company in his portfolio. Keep in mind that I'm pulling this information from Dataroma, which means that's his 13F filing, which does not include stocks on other exchanges outside of the American Stock Exchange. So at the end of last year, I knew he owned a company called Basic Fit, ticker symbol BFIT. This is a company that owns gyms in Europe. And so he may still own that company. I'm not sure. It was a pretty small position in his portfolio, like 5% or less. So he may still own that one. I'm not sure overall. But what do you guys think about Cliff Sosin's portfolio. Certainly some things seemed like kind of a stretch or maybe kind of speculative. He kind of has an interesting way at investing overall, but I do like his approach on the concentrated portfolio, and some of the stocks do seem interesting overall. So do you own any of these stocks in your portfolio? Is there another super investor you want me to do a video on? Throw it down in the comment section below. Thank you so much for watching. I really appreciate it. I'll catch you on the other side. Take care and God bless.